Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking in on Netflix daily, weekly, shorter term time frames. So the bulls are in control. We've been forming higher lows and higher highs consistently now for over a month. But we are getting to a point where we're trading fairly slowly uptrending. So you can see we're on the verge of a bearish MACD cross and a bearish TCG cross. And it could very easily follow through. It would only take really one solid red day to see those with that bear break. But as of right now, the bulls are absolutely still in control. You can see every time we dip below this 8-period exponential moving average, we do buy that dip and see the bulls hold above it. I say not we buy the dip, but the market buys the dip and keeps that support by closing above it. We do have an indecision, very small doji here on tiny volume. The market had tiny volume on Friday. Every time we've seen a doji here the past 3 weeks, it has been followed by a green day. So we'll see if we get that pattern again on Tuesday. If not, it is a potential red flag for the short-term bulls. The high that we've seen is 127.74, and we're looking at these resistances back here, which we are struggling with. The high we saw back here was 129.29, but we didn't see a candlestick close above 128 psychological resistance. We pretty much saw 1, 2, 3, 4, 5, 6 rejections from that level in a row, and now we have rejected from that level again, unable to close above it. Goal for the bulls next week, close above 128, get to a higher high by breaking 129.29. That's the ideal scenario. If we see a bearish cross of the MACD and the TCG cross of the 4 and 8 period exponential moving averages, we'd be looking down at this middle Bollinger Band, which will line up with this consolidation low, 122.87. So we do have a lot of support built on the way up. You can see every time we consolidate here, we build a base of support that on the way back down should act as support. And we look at the weekly time frame and we see we've seen 6 green weeks in a row. So seeing consolidation from here certainly wouldn't be surprising. After that 6 green weeks, we had the breakout, consolidation low. Maybe we start reaching an equilibrium by forming a lower high and then pulling back, forming a higher low, and seeing this range tighten again. We had a very clear equilibrium pattern forming down here after the dump, where we had our high of the bounce, higher low, lower high, higher low, lower high, tighter and tighter and tighter before the bull break did occur. So now in the opposing direction, due to that bull break, perhaps we see another equilibrium. So next week, it's all about 128 psychological and 129.29 resistance. And if we lose these exponential supports and see the green line cross the red line to the downside, it will be a potential bearish signal. We can see we got the bull signal back here at the end of November, and it had some nice gains to the upside following it. And we also had a bear cross back here in the start of November, and there was a nice drop that followed that. So looking at the past, we have seen some nice swing trade signals given by these crosses of the 4 period and the 8 period exponential, and we'll see if we get one for the bears this coming week. And if not, the trend remains in favor of the bulls. So I hope you have happy holidays. Look forward to seeing you soon. Have a great night.